Welcome back, traders. We're heading into a high impact end to the week with US inflation data and year-end final policy meetings from major central banks such as the ECB and the Bank of Japan all on the calendar. So as investors are waiting for fresh policy signals ahead of Christmas holidays, let's have a look at what the technical signal suggests for dollar yen, euro dollar, and gold. And starting first with dollar yen in the daily chart, I can say that we had a nice bullish setup recently. The price has rebounded just around the lower band of this bullish channel, and so the next action could be on the upside following that rebound. And if we look at the technical signals down here, we have it seems that the short-term bias is still skewed to the upside, since the RSI is above, it's comfortably still some distance above its 50 neutral mark, and the stochastic oscillator is still sloping upwards. So the bias is still skewed to the upside, and the fact that the price has closed above its 20-day moving average provides extra optimism. It boosts optimism for a continuation higher, though we should consider that dollar yen is still around its November's high of 157.88, and also near a key territory which previously caused the FX intervention from Japan. So let's see whether any increases above this territory, above 157.40, 157.88, will cause any reaction in Japan, whether Japan will intervene in markets to help the Japanese yen. If not, then we could continue towards the 160 level, where the upper band of this bullish channel is placed. Also note that the Bank of Japan is expected to raise interest rates tomorrow on Friday. So although that it's almost fully priced in, we would like to get stronger signals about whether the central bank will continue to hike interest rates in 2026. So if the central bank indeed uses a hawkish tone, then perhaps dollar yen could reverse to the downside, and in this case the lower band of this bullish channel could act as support just around the 155.60 territory. Lower than that, near the 154.55 level, there is another constraining line drawn from May 2025, so that could also act support, perhaps along with the 50-day moving average just around the 153.78 level. Then below that, the 38.2% Fibonacci retracement level of this up leg over here, it was a key constraining zone from October to November, so that might also attract attention near 153.20 before we head towards the 151.70 level, which is the 50% Fibonacci level of this upward move. Now looking at euro dollar, well, unlike dollar yen, euro dollar was quite muted lately. There was a warning near the 1.1650 level since the price failed to cross above this threshold, which has been blocking upside movement since the end of October. That signaled, that caused some discomfort. And if we look at the technical indicators, the bullish bias has weakened, but we haven't actually exited the bullish area. So that suggests that upside moves are still likely in the short term, particularly as the price keeps trading above this bearish channel, as long as it maintains its bullish breakout above this channel, above the 1.1585 level, where the 50 and 20-day moving averages are placed. So if you cross below this territory, I expect a continuation lower, and perhaps towards the 23.6% Fibonacci retracement level of the up leg from 1.0176 to 1.1917. That's around 1.15. So also interestingly, the 200-day moving average is also approaching that territory. So any negative corrections here could actually activate could actually intensify selling pressures, likely towards the 1.1375 and 1.14 region. Now, in the event of an upside breakout, and that could happen if, for example, the ECB suggests that it's going to keep interest rates steady, but also if its statements increase chances for a positive reversal in interest rates, perhaps that could help euro dollar to continue higher. If, for example, the ECB suggests that interest rates have reached the neutral level, then that could probably help euro dollar to break above the 1.1650 level and then continue towards the 1.1810 level, where it found resistance back in September and also back in July. So that area over here could be critical. If we hit even higher, then the price may attempt to print new higher highs above the 1.19 and 1.1960 region, where it peaked back in September. And finally, looking at the precious metal, at gold, well, it has been also quite it has been also following a very quiet trading lately, a very muted trading after failing to close decisively above the 4,250 and 4,270 region. Now, if we look at the technical signals, it seems that well, we haven't actually exited the bullish territory, and that can be justified by the fact that the price is keep trading above the 4,100 level and 4,135 zone, where the lower band of this triangle, the 20 and 50-day moving averages are all placed. So the price, it still seems supported, and that keeps upside risks alive. So what we need here is a clear move above the 4,250 and 4,270 in order to reach the previous all-time highs and even touch the 4,400 psychological mark. Then beyond that, in case we have a much faster rally, if we see a significant bullish reversal and a break above 4,400, then I expect the rally to extend towards the 4,650 level, where this resistance trend line coming from April is placed. Now, in the event of a break below the 4,100 level, then perhaps the 4,000 psychological mark could stabilize the price. If not, then I expect another test near the 3,885 zone last seen back in October. So that's everything I wanted to share with you guys. I hope you liked my video. Please visit our website and subscribe to this channel for more analysis. We'll be back soon with more technical updates. So bye bye for now.